though this is clearly major news, it is no surprise to anybody, including James Nixon. However, James says this rate hike by the ECB is just the first in a series of steady moves to raise borrowing costs in the Eurozone. James is a former ECB forecaster, now co-chief European economist at Societe Generale in London. James, welcome to the show. So how many times will we see the ECB hike rates before year end? You say it's not going to be just a one or two hike series. It's going to be much more than that.
I think that's right. I mean, I think what they've said is that this is the start of a normalization process, and really the ECB have decided that it's time to get basically back to a positive real interest rate. So I think the benchmark has to be something like 25 basis points per quarter to get rates to 2% by the end of the year.
James, the rates are too low for Germany, too high for the weaker members. What's the fallout here?
Well, I think that is a challenge. I mean, we obviously have very divergent growth prospects in Europe at the moment. Germany, to a certain extent, is booming. And critically, Germany is one of the few European countries or global countries that hasn't really suffered from a big debt problem. But for some of the other peripheral countries that have high government debt and high levels of household debt, those countries are very sensitive to the interest rate. And certainly, if we do see, say, 100 basis points in interest rates over the course of the year, that's going to significantly increase debt service costs for both governments and households. And that's going to just worsen the tensions inside the Eurozone.
James, what should we expect to hear from Jean-Claude Trichet today?
Well, I think the key thing the market is looking for is really, whether this can be interpreted as the start of a sequence. Now, Mr. Trichet typically will make the point that they never pre-commit and that this is not necessarily the start of a series of rate increases. But the key will really be on the language, and in particular, if they indicate still relative confidence in the growth of the recovery and at the same time indicate that risks to inflation are still on the upside. But I think the market will interpret that fairly clearly and that this is the start of a sequence.
James, thanks very much.